Hello traders, this is Mike Billion. Today is February 19, 2017 and let's talk about the market. Let's start with the spider. The spider, as you can see here, after November 8, it has been in a bullish rally, and in December, between December and February, it moved sideways and it finally break out the Fibonacci 229. Now it break out the 232 like butter without stopping and is heading to the 237 level. So it's completely bullish. I see a lot of room in directionals. ADX is at 24. It's a very strong bull market right now, and you should be trading with the bulls right now. Now, which is gonna stop here and do a little correction. Well, it correct right here between December to February. It moved sideways for 2 months, and now it's moving up again. The thing is, there's gonna be a lot of things happening, and I think it's gonna test this trend line soon, or retest the Fibonacci 232. So that will be a nice entry if you can go there. If it goes there to 232, that will be the key number to enter long. I don't want to buy at 235 because it already moved, but I think this trend line is important for short-term trades, but for long-term trades, I think the market is really bullish. Now let me show you the VIX. I always go to the VIX to see what's going on. It's completely bearish. So in the VIX, so it means the market is bullish. It's just moving sideways between 10 to 12 to $13, moving sideways, and like it did right here, and it can stay there for a long time, until something major happens and they spike, or we get a little correction. ADX is a 9, meaning nobody is buying the VIX right here for the long. Everybody's comfortable that the market is gonna still going up more. So that makes me think that the market is gonna continue up. Now let's talk about eBay. So knowing that the market is bullish, I was looking for trades to go bullish, but there's a lot of trades that already made their move and are in divergence in the DMI, meaning the directionals are at the top and the bottom, and I don't like to enter those trades because usually, especially because we trade auctions. So when there's a directional divergence, that means that this price is gonna move sideways, and that's bad for auctions. Good for the people that have stocks and they get dividends and stuff, but not for auction trade because it moves sideways and then you lost your money even though you're in the right position. So right here, this is eBay. I enter long on eBay. It's moving sideways a little bit right here. 1, 2, 3, 4, 5 days. All week moves sideways. Small moves, very slow. I see a lot of room in the directionals. It's not completely in divergence like it was right here. You see this move? It's a divergence. Directionals at the top, at the bottom, and it moves sideways. So I wouldn't enter right here because I knew it was going to move sideways. So this is a perfect example that I'm saying. If you see a stock that is in divergence, don't enter, especially if you trade auctions, because it's going to destroy your intrinsic value. So I prefer these ones that have a little room because I know they're going to go to target. My target is $35 in this one. So let's see if we can get. It's a perfect trade because ADX is a 40. It's a very strong bull. And it has a space on the directionals to go to the top and the bottom. So let's see what happens to eBay. Now let's talk about Nordstrom. So this one is moving sideways right here at the Fibonacci 4550. There's a little gap that you might want to probably close between 45.50 to 47, but directionals are bearish and strong with ADX at 23. There is support at the DMA 21. DMA 21 is $44. So if you break down the $44, I don't see any support right here to retest the $35 that it tested back in May 2016. So let's see what happens. I'm bearish in Nordstrom. I think it's just moving of setting up for a major let down to $35. So let's see what happens. Now let's talk about Starbucks. I got this one wrong. It break out the bottom of this one and it looks like it's gonna go to the top. I went bearish in this one, but not all trades are gonna work for you. You're gonna have losers and you're gonna have winners. But for the year, I'm up more than 600% profits So a small loss in this one, is nothing because the winners are much larger than the losers. So we got this one wrong. I'm gonna let it go. I still holding a position in puts. There went down more than 50%, so I'm gonna hold it because there's this resistance here, and I have more than 20 days. So in more than 20 days, it can go right there, move down, go again the gap to the bottom of the gap, and go to the bottom again. I think this one long term is bearish. And I say that not because I don't like Starbucks or whatever. It's because it's making lower highs. It's making lower highs. This long term is bearish. Whoever tells you that this is long term bullish is lying to you. It's not true. It's long term bearish. It's just moving or moving up from this resistance and it's trying to close the gap right here. So now let's talk about another one. Let's talk about Tesla. If you follow my videos, I said this last week. I say this is major resistance Fibonacci 287s, and every time the last two times we went there, we went down. It did exactly what I said. It went there because it was a huge divergence. There was not room. Let me zoom this out so you can see, understand where our divergence. I don't want you to think that I'm talking something crazy here. So this is a divergence. The plus directional at the top, the minus directional at the bottom exactly. And I say there, it's not possible or it's low probability that it's going to destroy that level and continue. I think because it's a divergence, we're going to pause or we're going to go down from there. So we went down. So we failed right there and it's going down. It break down the DEMA 21. But of course, the report is coming this week, so that will be the major mover for the stock. So I don't recommend you to go here and buy puts or buy calls because before reports anything can happen. The report can be neutral and go up. The report can be bad and go up. The report can be good and go down. So earnings reports are gambling. So that's what I wanted to tell you. Now let's talk about the last one. This is one that I have on my watch list, and you should have it on your watch list. It's a Texas Instrument. It's moving inside this this wedge right here, the support. You see the support right here? This thing has moved up crazily. You see this moving up? It went up from $47 to $80. And I'm talking about just a month, a year. In a year. And in a month, almost in a month, it has moved a lot too. So this is a whole year moving up without, little stop. Boom, down, up, down, up, down. But it looks like it's going to go to the bottom and continue. And when it goes to the apex, that's when you wanted to have it ready because I think it's going to move down and going to test the $65. So it's a good one to have in your watch list. The ADX right now is very low, so I think it's going to continue moving sideways right here. But it's setting up for a nice trade short. I don't think it's going to be long, but it's setting up for a short trade. Not long term. Long term, this thing is a huge bull. And if you have it on your portfolio long term, this is the bull you have to have. But it's setting up for a nice auction trade, short term, bearish, short term. So don't get me wrong on this one. Okay, traders, this is everything for today. Enjoy your weekend. Trade on.